Okay, this is Professor Minton, and I'm back here for part three of the serial problem in chapter three. And this will wrap up this side of it. This will wrap up chapter three, and then we'll go on to chapter four in the next video. All right, so made a few subtle changes to what we were looking at the end of the last video, which here's still the adjustment column and the adjusted trial balance, but I've added a couple of more debit credit columns. And the first one will say income statement, and the second one balance sheet. And so we're going to use this 10 column worksheet to also do our income statement and our balance sheet. And so we're actually, now that we've got everything here, this is actually going to go fairly quickly, because all I'm going to do now is pick out those items that are balance sheet items and those items that are income statement items. So yeah, here we go. I'm going to start now with the income statement because we always do the income statement first. And the first part of it here is the revenue side, and it's just going to be equal to whatever it was on the um, adjusted trial balance. And the same thing will be true for all of these debit entries here that we have for expenses. So I'm just going to do the first one here and then drag the rest of them down. And now what I want to do is I want to get a total of these two columns. So I'm going to do auto sum. And so it wants to auto sum something different than what I want it to auto sum. So I'm going to get that like that. And then I'm just going to ask this one to do the same thing, auto sum, and I just want to pick up everything in the credit column, which of course is only one item. And you notice that I have a difference here. And so the difference, if it's on the outside, and we'll have the same, we'll have a difference over here as well. If the difference is on the outside, then that indicates net income. So I have an indication here without having proven anything. I have an indication that I have a net income here. And so it's just going to be equal to simply this number minus this number right here. And so this happens to be your net income. And so I'm just going to make a line over here. And again, this is not terribly important for you because you don't have to do any Excel work. But this is something that, by the way, you should probably be thinking about doing on your own, just so that you get a feel for it, because it's absolutely the go-to tool for all business people. And so now we would, of course, auto sum this and get these two numbers and make sure that they agree with this number over here. And so I'm just going to bring it down as well. And so you notice now that I'm balanced here with this number, which is a forced number at this point for net income. Okay, so now we want to go and pick up the balance sheet side. And I'm going to pause this just for a second. Okay, I'm back. Okay, so now what we want to do is we want to do the balance sheet side, and we're going to do it the same way. If it's now remember, these are all income statement items here. Everything from computer services revenue down is an income statement item, and everything above this line, above the services revenue, these are all going to be balance sheet items. So I'm just going to make it really simple on myself. I'm going to say that it's equal to this number here, and just bring it over, and I'm going to just drag this on down all the way down through this number. And over here, I'm going to do the same thing, only I'll start with the first credit, which is equal to this number. And I'm going to drag it down the same way. And that gets all of our credits. Now what I want to do is I want to add these up again. And so I'm going to auto sum, and I'm going to grab everything in the debit column of the balance sheet. And then I'm going to do the same thing over on the other side, and all I have to do is just copy that same formula over. And notice now several things. First of all, this number here and this number here, these are way different numbers, okay? This number and this number. But what we should get when we look at the difference between this and this, we should get this number. So let's do the calculation. It's equal to this number minus this number. And notice that it takes a $14,460 total to make this number agree with this number. And notice too that they're on the outside. If they were on the inside, if the balance required was on the inside, that'd be a net loss. Okay. And now I'm going to auto sum again. And I'm just going to auto sum these two and drag it down. And now you see 92,210 on both sides. And by the way, now this is, you've just calculated that simple. And we have calculated the income statement and the balance sheet. And so, what you really want to appreciate here is that we were able to do this in just a very, very brief moment once we were at this point, once we were at the adjusted trial balance, because now we're doing is just moving numbers to wherever they belong, whether they belong in the income statement or the balance sheet, we just move them across. Okay. And so this is the informal presentation. And this is what you see as an accountant or your CFO sees or whatever. Then what we need to do is we need to transfer that information in more formal form to the income statement that we would actually publish. Now, the first thing I want you to notice is the heading, of course, is Business Solutions. It's the income statement, and it's for the 3 months ended December the 31st of 2019. It's not for the whole year. It's just for those 3 months ended. And now all I'm going to do is just pick up these numbers that are up here on the income statement. So the way I'm going to do it is I'm just going to say, first of all, I'm going to make it easy on myself again. And I'm going to say that this first cell here is just equal to the computer services revenue. And I got to find it first. And then I'm going to come over here and I'm going to say that this cell is equal to this guy right here. And now I'm going to go down and I'm going to pick up all of the expenses. And so I should be able to just point to this and then drag it down through the range. And I think that gets them all. And now the same thing will be true here. And by the way, these are operating expenses, so I'd probably have something like this. Insert less operating expenses. Merge and center, left justify. Kind of like that. Okay. And so now what I'm going to do is I'm going to come over here. I'm going to grab the actual numbers themselves, starting with this $400 here. So it'll be equal to this number. And then we're going to just copy them on down. Okay. And so the total operating expenses then, and we only had one revenue stream, so there wasn't really any need to put that one down. And now I'm just going to come up to the top and I'm just going to do the sum of this group. And what I really want to do though is I really want to move this one over to right here. Okay. And I'll put a line underneath this one. And again, all we're doing is now we're just making the calculation for what is up above right up here. Okay. And so the net income then, and by the way, I mean, this is net income, but it really isn't because what we don't have in here are any taxes or things like that that we would ultimately have to calculate later down the road. All right, so we're going to make this equal to this minus this, and we'll get the same 14,460 if we did it right. And this is the net income, and I'll put a double underline and a top border on that. And yeah, if I can find it, here we go. And so now we have our net income. All right. Now the next thing is we want to have the statement of changes in equity. All right. And the way that we start that is with the beginning balance in equity. And this will be at October 1. Oops, And the balance in equity at that point was zero. And it was zero because we hadn't started the business. Now, what we have is the initial capital contribution. UION. And the initial capital contribution was equal to that 73,000 that represented our opening entry. This guy right here. Okay. And now what we want to have is we want to add the net income. And our net income comes to us from right here. So it's just simply equal to the amount that's in that cell. And notice, by the way, just for future reference for those of you who will be using Excel, and you all will eventually, and notice that I'm not typing in a number there. I'm just pointing to a cell that has a number in it. And the reason is if I made a mistake up in through here someplace, and that needed to change, or I didn't have quite enough of the numbers, I missed a number or something like that. When this number down here changes, so does this one. All right. If I typed in a number, I'd have to change both. I don't want to have to do that. All right. Now, less S-ray withdrawals. These are the things that he took out of the business. And, I want to be consistent here. And the withdrawals we find up here at the top in the balance sheet right here. Okay. So again, I'm not going to type that number in. I'm just going to say that it's equal to this number. So if I make a mistake and I have to go back and fix it, well, I don't have to fix everything. I just fix this one. Okay. And so we don't have anything else. If they had made some additional capital contributions in addition to the initial capital contribution, we would put that in there. If they had a net loss, of course, instead of adding it here, we would be subtracting it. Okay, so let's then have the ending balance, October 31, 2019. And it's simply equal to this number here. And remember, next, when you start over again in January, it'll be whatever this ending balance is. So that number plus the initial contribution plus any net income or minus any loss minus the withdrawals. And so $80,360 is your new capital balance. And what I need to do now is I'm going to go through here. I'm going to clean up a few things here because anytime we make a new calculation or a new column, we want to have a dollar signs in here. So I'm going to put the dollar signs up here. And I'm going to take away the decimals because I know there aren't any decimals in this situation. And I do the same thing here. Make a dollar sign. And I'm just going to hold my control key down so that I can point to several numbers here. And so now I have my dollar signs in here. And so now I'm ready to look at the balance sheet. And I'm going to get rid of some of these excess rows that I have that I don't need. Just going to delete them. And so now on the balance sheet side, what I need to do is understand, you see this number here? This is the withdrawals, and I've got it in the ending capital balance. So I'm not going to pick up anything from the balance sheet up here from this point on down. Okay, this has already been computed. It is part of our net income and everything else. Okay, so now what I want to do is I want to come through here and I want to pick up all of this stuff here. Okay, and this stuff here. But because these are all assets all the way up through here. Now we have liabilities and we have this all these are three liabilities. And then the capital is going to be the number that we got from right here. okay, because we've already computed the ending capital. Okay, so we would start out with assets, and more specifically, we would typically start out with current assets. Okay, um, this one's going to be a little bit. Oh, and before I forget, see, all I did was just copy all of these things down and then change the balance sheet. But understand that a balance sheet's only good for a single day. So I've got to get rid of everything before December the 31st. And this probably doesn't interest you that much, but I don't want the number to appear like that. So when I go to the number group, I can come in through here and change this. And hopefully when you watch some of this stuff, even though I'm not asking you to do it, when you watch it, you'll see how it gets done, and be able to maybe work with this later on yourselves. It's an incredible time-saving device. All right, so I'm going to say that this is equal to, and I'm just going to point to this first number up here, cash, and then over here I'm going to put in the actual number, and here's the actual number, and I'm just going to pull a few of these down. Now, what I probably want to do here, because of the way that I'm doing this with the accumulated depreciation, when I get to these guys right here, um, I'm going to change this slightly, and I'm going to say that this is less accumulated depreciation. Office equipment. And I'm going to do the same thing down here, less accumulated. And bear in mind, this is not the way that you're going to actually do this in the end, because we're going to have a lot of changes as we go forward. But this gives you just an idea of the way that it would look. And I'm going to abbreviate that one so I don't go beyond the numbers. Okay. And so now I'm going to pick up everything through the office equipment. And then the office equipment itself, I'm going to move over here. And I'm going to pick up this accumulated depreciation. Whoops, equal. And it's $400 or something like that. So I'm going to pick it up right here. And then the computer equipment itself is going to be equal to this number, and the other number is the accumulated side, which is equal to this number. And so now we're going to make these calculations here, equal to this less this, and the same thing down here. This is equal to this number minus this number. Now, this is not terribly formal at this point, but it's close enough for getting you started on understanding how this stuff actually works. Okay, so total assets, and these are all assets or contra assets, and contra assets, of course, are subtracted from the asset itself to get to the net book value. And now I'm just going to add these all up. And if you noticed, anytime I came to a non-contiguous cell, it stopped right there. All right, now we want to get our liabilities. And so we would label that. And we'll call it liabilities and equity at this point. And now liabilities. And more specifically, you would be looking at the current liabilities first and then the longer term liabilities. We're not going to go that far at this point, and they're all current anyway. So let's come up here and click on this one for the accounts payable. And we'll grab the next two. And then we want to come over here and put in the actual amount of the liability. And we'll get that again from the balance sheet up here. This guy right here. And pick up the other two. 500 and 1500. And now total liabilities. And we'll add those up, give us 3100. And now equity. And it's just going to be the single item that we get from right up here. So equity is equal to the ending balance right up here. And so now total liabilities, equity. And of course, as I say, I'm playing a little fast and loose with the rules for this point, or to this point, but don't worry about it. We'll get it all straightened out later on. Um, because when we get into later on in the semester, we'll get into more formal presentation. But right now, I just need you to kind of understand how it works in general. So I'm going to auto sum now the this number here, which is the total liabilities, plus my total equity, and hopefully it comes out the same number that we see up here, which it does. And so now all we want to do is go clean some things up a little bit. So I'm going to put some dollar signs in other words. So I'm going to click on the first one in this column. I'm going to do a control. I'm going to point to this one. And we did a calculation here, 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 and a calculation here. And we'll put dollar signs on all of those. And all I did was hold my control key down and just grab each one of those individually. And now, of course, what I want to do is I want to put in some underlining just to make the presentation a little bit more formal. So I'm going to put a bottom border in there, but before I do that, I'm going to hit my control key and then point to this one as well, because I need a calculation there. I need a calculation right here. Okay. And so I need a bottom border for all of those. And now what I want to do is I want to put my double underlines um, here and here. And, you know, look, I know that I'm going through this really quickly. I understand that part. But I also understand that you know, these things are incredibly lengthy when you start uploading them. The last one that I uploaded took me probably 3 hours to complete and upload. So, but I want these to be lasting so that you can look at them over and again instead of something that we may talk about for 50 minutes on a Zoom session. Now, we're going to do some Zoom sessions. As a matter of fact, I think we'll probably do one either Tuesday or Wednesday. I don't know which one yet, but we will do some Zoom sessions for you for questions and answers and those sorts of things. But until that time, let's continue just to do it this way. And I'm going to put some double underlines into this one too. And so you're just cleaning up. This is just the aesthetic side. And again, so let's take a look. This is the number that we got from taking from the revenue all of the expenses. So what goes on the income statement? Revenue and expenses. This number here is how we got to the ending capital balance or ending equity balance. And the way that we got there was to take the beginning equity, in this case 0, and the initial capital contribution, which they told us was 73,000. We actually did a journal entry on that in October. This is the net income for the 3 months ended, and this is the amount that the owner withdrew from the business. So this plus this minus this equals this. And again, if you had a loss, it would be subtracted right here instead of added. This number right here is the new capital balance, and that number goes to right here. So what I want you to see is that these statements are all tied together. So I'm going to make a little shape here to show you what I'm talking about. So this number here, and I'll see if I can get it to go where I want it to here, goes to right there. Okay? And this number here And I do this a little bit better if I were actually doing it in a more formal way. But this number here, I'm going to take right down to this number, if I can get down this far, right here. So as you can see, these three statements are all tied together. And so, if you're going to be right, you have to have agreement among these three statements. Okay, that takes care of this, and I will see you on chapter